here. That's really where I want to go next in Options Insight. We are just about 40 minutes away from that closing bell. Have to get you up to speed with the day's options trading. Joining me now, Scott Bauer of Prosper Trading Academy. Talk to me about the VIX, because you were looking at with the 25 handle. Does that look cheap? How are you thinking about it?
So, trading this for the lifespan since the VIX ever came out here, it's really hard to think, Taylor, that 24, 25 is cheap in the VIX, which historically it's not. But for the last 6 months or so, we have seen higher lows, lower highs, a convergence in the VIX, and 24 or so, just higher than 24, has been major support. It's coming right off the 200-day moving average. So yes, I do think it's cheap right now to buy some protection in the VIX, some upside calls, maybe upside call spreads going out to September or October, because yes, it is cheap. We may be back, by first quarter of next year when we're looking at the teens again in the VIX, but for this environment, it's cheap.
What do you make, though, of how the way one headline can move a market? We were higher on the day. The market felt optimistic, and it feels like this market is using any headline, any excuse to turn lower. Does that not worry you a little bit?
Oh, it absolutely does. But you have to remember, we're trading on very light volume. It is summer volume. Yes, we're in earnings season, but we're going to see moves that are maybe a little bit extra because of that lighter volume. But there is no question that we are still in that era right now of sell the rips. We were buy the dip for years and years and years. We are definitely in a sell the rip environment right now. I don't see that changing until at least the fourth quarter of this year.
From the options trading to some of the technicals, I'm curious how you think about, and I'm reading a note here from BTIG, talking about how we're now 60 days under the 50-day moving average of the S&P 500. And you're looking at one of the longer streaks that we've had now under that since about 2008. Technically, sentiment-wise, what is that telling you?
Sentiment is very bearish. There's no question. I still believe we're in an oversold marketplace, even with the rally that we've seen, over the last couple weeks or so. I think we are oversold. Does that mean, that we can't go lower? No, I do think we are going lower, but I think that we are bottoming. That doesn't mean there's not 2 or 3% below here, but I think we are going to be very, very range bound in the S&Ps, probably between about 3,700 and 4,000, really throughout this earnings season for sure, maybe into the fourth quarter.
One thing that has not been in the trading range has been energy, the lone outperformer year to date. I mean, you're still up 27% on the energy sector within the S&P 500. How are you thinking about the leadership that energy provides?
So it definitely got to be a crowded trade, a month ago, 3 weeks ago, and we saw a lot of these stocks pair much of those gains that they had. But on the recent pullback that we've had, Taylor, I really still like the energy complex in general, and there's a few stocks in general. CF Industries, which is more on the fertilizer side, Devon, CVX especially. So in CF, what I'm actually doing, I'm buying a call spread going out about 3 weeks or so, which takes into consideration earnings, which are on August 5th. So I'm buying the August 5th 85.90 call spread for about $1.50. Now that was trading cheaper earlier today when I had sent this to you. We saw CF actually rally back after some negative news came out. But August 1st are earnings. These are the August 5th options. I love the bounce right off the 200-day there, and I think there's a lot of stocks just like that you have to own on this pullback that we've seen.
Really appreciate your time and your expertise. Scott Bauer of Prosper Trading Academy, thank you for joining us for Options Insight today.